Right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for the special Tuesday episode, September 22nd, 2025. Hope everyone had a good Labor Day. And so we moved the show to Tuesday, but we are recording this at 4 p.m. Eastern Time. And this is episode number 492. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. And for today's expert panel, I have invited um, Michael Filighera, Michele Schneider, and Wally Olopade to join us again. And Jim, the option professor, is back to moderate. So I'm going to go ahead and turn it over to him.
Sure. Okay. Thanks, David. And thanks everybody for being here. We got a great show here and we got a little bit of a reversion to the mean today. So we're going to try to find out if this is the beginning of something bigger or if this is the garden variety pullback and now we're okay. To get started, Michele, do you want to either share your screen or use the chart that's up there and give us a little bit of an overview on what you might be thinking the S&P is up to now with this pullback we've seen?
Well, first of all, hi, and thank you for having me. And also, I don't know either Michael or Wally, so it's nice to meet you guys as well.
Yeah.
Um, so here's the thing. We started to see this rotation last couple of weeks into small caps. Also, along with small caps, we started to see some money coming into the financial sector through the banks, even the regional banks. And so I'm looking at more than the SPY performance right now is the outperformance of the areas that I consider to be the inside sectors of the US economy, which would be the Grandpa Russell, as I like to call it, or the Russell 2000 index. That's IWM. I like to look at that ETF. The retail sector, which I like to look at XRT, and IYT, which is transportation. And while IYT is sort of a weak link, and I always say the market is as strong as its weakest link as it hasn't become an anchor. So while the SPY has popped down here, another member of my economic family would be semiconductors, and that's gotten the weakest. So right now, we're looking at this good rotation with some optimism, even with the yields going screaming today, that things will be okay in terms of a build or a stronger US economy. Whether it's real or not, it doesn't matter. I'm just talking strictly what the chart's saying. All of my economic modern family members are outperforming the benchmark of the SPY, except for semiconductors. So what I would be looking at even more than the SPY right now would be what happens with the chips, because they have been the leader for so long. The rotation out of them and into these other areas could be a great just sort of rotation into a different type of market from growth to value, or it could be a last gasp with semiconductors getting heavier, more from a weak link to an anchor that would then bring down the whole market. At this point, we don't know that yet. If you're looking at the SPY here, you're seeing it's still above the 50-day moving average, assuming that blue line is the 50-day moving average.
Mhm.
And it's still above what we call a July 6-month calendar range breakout level, which if you're looking at SPY would be a bit lower, like 628. So it's got a little room before we start to say, oh my God, this is really the end of this great bull run.
hmm The SMH, I don't know if we can put that up there. It definitely, is losing altitude here. The question is it going to accelerate to the downside, or is it just going to maybe hold this 280 former low? Yeah, you see what I mean?
I see what you mean. And look at the volume today was pretty good, not as much as Friday on the down day, but we did manage to, and it's interesting because your chart looks a little bit different than mine.
Mhm.
Mine shows that we closed under the 50 and yours shows that we closed over the 50. And it
Oh,
could just be the difference
um,
between,
this is the EMA, not the
Yeah,
simple moving.
exponential.
okay, so
Yeah.
we have to
I
look at apples and apples.
I
Yeah.
can I think I can add
Simple,
simple. I think.
simple moving average.
Okay, that's okay. Well, okay. Now it's the simple moving.
Okay. Cool. So you can see the difference. That's why we were looking
Yeah.
at the same thing now, right? So this is called a caution phase, and yet it's a weak caution phase because the slope on that 50-day moving average is still obviously up, strongly up. And you also, we like to look at 2 days of a confirmation before we start to say we're in a different phase. So we went from a
Yeah,
bull to a weak caution, unconfirmed. And that's
yeah.
the best we can say. You see a lot of support underneath that now, all the way down
Mm.
to around 270. So, at this point, I'm going with healthy correction.
Mhm.
But of course, anything can change.
Anything can change, but yeah, it does. It does have a little bit of an acceleration. I thought the S&P was interesting that it closed back above 6,400 on the future. If you look at ESU, um, it went down pretty much to the former lows of the 21st of August. The right around that 63.75.
Hmm.
And then you'll notice I had some moving averages that I thought were important around 6,400, and it closed above it. So I thought that was
Sorry,
um,
which
ESU 25. Is that what they call it on the,
oh,
or what is the
what is
S&P future? S&P
oh
future E-mini.
well, that's the normal SPX, but the futures, yeah,
Yeah, E-mini.
there.
There you go.
Yeah. And let's face it, with gold going ballistic and silver
Yeah,
now over $40 an ounce and
yeah.
the bond yields today going up to 5%
Mm,
and the dollar getting a little bit stronger. I don't wouldn't call that exactly a bull move in the dollar. The
hmm
market absorbed all of that. I
hmm
mean, why? We can sit here and speculate all day, but if we're looking at it from a technical perspective, we can say right now it's absorbed. Maybe, and of course, people are spooked. September, supposedly very weak from a seasonal standpoint. But at this point right now, like I said, I have some cash to put to use because I don't like buying the top of the market like we saw last week. This
Right.
dip to me is encouraging in certain areas
Mhm.
I'm looking at, and I'm not scared, at least not
Yeah.
at this point yet.
Not at this point. Yeah. Okay, Wally, what are you seeing as far as how we're doing here with the S&P? Garden variety pullback or more sinister?
Yes. So kind of going back,
You
going back to
want to
what
share your
Mich
screen? Because I know you have a different look
oh no,
to
no,
your screen.
that screen is totally fine.
Okay, good.
That screen's totally fine. So kind of piggybacking on what Michelle said, in regards to the fact that seasonality, I'm big on seasonality, and so we know that September is typically a weak month, probably one of the weakest month. That and February usually the weakest month of the year, and so the expectation going into September is that we should start expecting things to go down. And seeing what's happening today and all the technicals are beginning to show that, there's weakness in the market. I won't be surprised that this is the beginning of that pullback that we expect. Now, how bad is it going to get? Now, that I don't know. But my expectation is yes, we are headed for a drop. And just even the candlestick signals that appeared on Friday. Uh, there's two major candlestick signals that appeared on Friday that tells us, expect the market to drop. And so seeing what happened today is not a surprise based off of that. And so
Right.
again, my expectation is, this is the beginning. This is the beginning of the pullback. There are indicators that are now showing us that, we've been oversold. I mean, overbought, and so now it's time for that pullback to happen. Is it going to go down to the 50 simple moving average? Possibly. I won't be surprised that we might even go lower than that, honestly, only because
Where does
when
that
you
come
look,
in about?
good question. Let's see. Where's the 50, wherever the 50 simple moving average is?
Yeah.
What,
Can you see that?
6,000? Yeah, 6,325. I would
Sure.
expect it to go lower than that, to be
Yeah.
honest. The better view would be if we switch to the weekly time frame and look at where the 50 simple moving average is. All right, that is where I would expect price to pull down to. So wherever that, yeah,
Yeah.
so around
59.50. That's a great
59.50
number. Yeah.
is where I would expect price to pull down to.
Yeah.
Realistically, for a typical September seasonal drop that ends up becoming an October bottom, which is what we typically experience. I would say, okay, a decent pullback would be down to that 59.50 area, and
Yeah.
then
And that
expect
would be
price to
about a
start heading
five.
higher.
That would be almost a 10% from the drop from the peak. So that'd be a, that would be a healthy reversion.
Absolutely, a healthy reversion
Yeah.
to the mean, and set us up for the rest of the year, quite frankly. So I won't be surprised that we can get something as that. So I'm
Good.
not sure what the news was necessarily saying as far as like the Feds or Trump or anything like that, but the technicals are beginning to weaken, and usually when that happens, chances are, and if I was to even show you right now, so like even if we look at like the RSI that we're looking at right now, the divergence on the RSI to me is enough to tell us, hey, get ready because you can see the price is definitely making some high highs while the RSI is not necessarily struggling to go higher. And so usually that's a warning sign. So the way I look at this is definitely um, pullback at the very
Mm.
best. Pullback at worst, 59.50, we could see price drop to that level.
Yeah. And the two reasons that could also happen is the quarterly taxes that are due on the 15th of the month. Well, there's a history that people sell stocks before that to raise money. And then we're going to get the first cut in a long time. And the reaction to that cut may be negative from the standpoint of if they're cutting because they think the jobs market is going south. Of
That
course,
would be, yeah, that
that
would
would be a
be
real reason to get out of the market because
absolutely.
consumer, yeah, yeah,
Absolutely. I would totally agree with you on that. And honestly, any news that can affect the market negatively would be a catalyst for more of a reason why the market should pull back. And again, it's just one of those things. Yeah, I'm not expecting to go higher. I'm just not expecting to go higher. I would be shocked. Let's put it that way. I would be shocked if the market goes higher. And so
And
we are,
October 14th is a big date. That's a date I think where the tariffs are going to be decided whether they were legal or not. So that could be a big date coming up before you know it.
I'm glad you
And
told me that. I didn't know that. I'm glad you
yeah,
told me
so
that
that
because
that's a big name.
usually when the market bottoms, it's usually towards the end of the first week in October and somewhere around the second week of October is when we
Yeah,
see the market
so
bottom.
that could
So
be a big catalyst. Yeah. And then,
very
of course,
good.
you got this new thing where they're going to save real estate by, doing something in the fall, another emergency call where, they're going to try to do something to make people buy high price houses, even though they can't afford them. Uh-huh.
Oh wow,
All
interesting.
right,
That'd be
Daniel.
great.
I mean, Daniel, Michael.
David,
Uh,
Yes,
you mean
Yeah, no. I was going to ask Michael. Excuse me, Mike. I can't. I was just. I would like to ask Michael. Yes, what his view was, and if he had any Fibonacci numbers that he'd want to, or cycles that he'd like to discuss. Obviously, if you change the screen over to your screen, you could show that pretty easily.
I am going to do that. As soon as it finally gets up there, this is the same thing. I got to choose the screen and it's not
Yep.
popping up real quick for me.
Oh,
Those are all, where are they?
well, let's talk about R.N. Elliott, a nice man from many,
Yeah,
many
really.
years ago.
Huh. Let me see if I can get this because this is what happened last time. And I
Oh,
try to get it up there and it's just not coming across. It's giving me the wrong screens. So what I do have, I'm going to go ahead and put my screen up
sure.
and let's see if it'll take it this time. It's very interesting, I think, what the market is doing. On an Elliott wave basis, I believe that we are still, if I look at the daily, let me just try this one more time on getting this up for us to see. There it is. Good. This time it worked.
Looks
Um,
like it's coming.
Yeah, it's loading
Yeah.
now. Okay, now we
There you
see.
go.
all
All
right.
right.
So I'm on my daily, and I think this has been a dynamic since April, when it bottomed on April the 7th, and then we started because all of the pauses and the tariffs and all the rest of it. And so the market, in my opinion, is moving higher and not done yet. I think we're in the final leg of it. And within that, I can bring it down to my hourly. It's that final fifth wave is forming what I would call a diagonal triangle, which means that all of the components, all of the waves, and there'll be five of them, are all going to be in a three wave manner. So it's an ABC, 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 AB, all the way across the board. And so what was going on, I still believe we got the smaller wave one and two done. And this was the first wave up on wave three, and this was the second. And it came down in three and it came down to support. And it didn't really, I mean, it touched below this low, but then it just kind of piled high. And then you saw what they did again, right? I mean, I can bring it down to 15-minute and just show you that, they pulled it down, ran it back up, pulled it back down, equaled the low, and now it's just get out of the way. And something has come out because they got Apple up $4 off of the close. And so I just went to Chuck to see, what, if anything was coming out. And I don't see anything, but they're loving something in Apple at the moment. And so that's going to give us that boost. Now, what I do believe is happening is like we still have a shot where we're going to continue to go lower. And in the S&P, actually, I'm showing you the NASDAQ, which is not.
Here on the NASDAQ. Yep.
Uh, Let me go over to the S&P. It's the same story where it came down, went race up, came back down, except the S&P did not come all the way back down and re-challenge that low. So the low stands, and it reached support, and it basically hit it on the nose, and now it's taking off. And if I had to say, right now, this is looking like it's 1, 2, and this is a 3 of what's going to turn out to be 5 waves up to put in that C wave and mark wave 3. Now, so what would my expectation be? Well, above 65.28 for starters. But I don't think it's going to be a runaway. And I think what happens then, they could take care of this in tomorrow, or by Thursday or Friday of this week, and then we come tumbling back down again. I am expecting some just on just the way the gamma is lining up and a lot of other things are lining up. I think that I'm kind of looking for additional downside, and we're looking for that low to kind of come in around the 11th of September. At least that's what my algorithms are kind of spitting out right now. And so also looking for a volatility pop. Now we got that very strong move early, and we got the volatility pop. So both sides. So now I have to go back and rerun it to figure it's like, was that enough? Was that enough? Did that complete this? And so now we're just going to go build and go back up and finish this third wave, come back down in a fourth wave, and then go back up in a fifth wave. So I think that there's still room. And again, not and those that have followed my stuff for a long time, they know that I'm all about, new lows versus new highs. But I think that the market's just not there yet. I think it's getting real close. And, just the activity that we saw in the last, Friday and then today kind of brings me about to where, gee, could I say that this high that we had back here was it? That was it. We don't get any more. And I know there's some people that are actually putting that in, and I get it. Totally get as to why you would do that. I really don't have a problem, but I don't think the market is done yet. And I actually think that we still have one major rally left, and it's going to come. And this is going to be the sticky point, because on the 17th, we have a volatility expiration first thing in the morning.
Yep.
And then we have the FOMC due out at 2 p.m. And then we have on Friday, I think it's a quadruple expiration.
Yeah, well, it's quarterly. Yeah.
And the quarterly actually comes all the way later on the 30th of September. Then we get that quarterly. So it's another month like we had in June, where we get just the normal monthly, and then we get the quarterly, 2 weeks later. And I think so we're going to get that kind of same response as we got in June. And I think we'll see that. I think off of that, that's the one I think that once we get this, if the rate cut comes, which the market is now demanding, saying we've priced it in, you must give it. And I think that they probably may. Um, Not sure what the odds are these days. You live in Vegas, you should tell me. Um, but I think that once it's out, and if we get that quarter point, I think it's going to be a tombstone marker. The pop we just put the tombstone right on top of it as the high of the highs. That's it. And then we just start to kind of unwind from those levels. Um, Now, my larger picture is that we are finishing. I need to go out to here actually. See, this is telling me I got the 3 and the 4. Those are intermediate. This is an intermediate 5. We're in the last leg up of that intermediate 5. We're in the last leg within that intermediate, even all the legs going up. So I still have upside targets, but I now am thinking that 6,600, maybe 67 is going to control everything. And that would be on a spike, and it may or may not happen. So I think we are starting to show some weakness. I think there's enough outside of the market that can really just turn things dangerously fast.
Yeah.
And
Well,
yeah,
one bullish thing today was to go down to that 63.75 neighborhood, which was the lows of August 21st. But the
right,
bigger thing I'm noticing is that the VIX went right into some resistance I have between 19 and 20, and it closed
right,
at 1734. That's a 200 point off of the high. So that plus the 63.75, you take that situation on the VIX coming off like that, and the 63.75 clearly holding up. And then I had 6,400 as a 36 SMA, and that got closed above.
right,
So you got to
right.
be careful about getting too bearish with this thing,
I
because
I agree.
people have been making money on stocks, and they are not all in apparently, and so they may come right back in. So,
The problem is it's like
who's
if
to
they
say today wasn't the low? I mean, we'll have to see. But
no,
if it,
I think we
the longer 63.75 holds up, and the longer this VIX doesn't like 18 to 20, it would build the case that maybe there is upside from
well,
there.
I'm looking for that. You're right about the volatility. I'm looking for a spike, and I'm looking for that spike to be between 22 and 24, and in October, the
Mm-hmm.
October VIX. And here I was looking for between 19 and 20. And so I'm
Yeah,
not
which we
sure. I
got
don't know
today.
what the high was on that today. You
Yeah,
just
today was 1938, right between 19 and 20. And then,
bingo.
like I say, even as I'm watching the thing now, it's melting to 1727. So still up on the day, but certainly way off the highs.
Right. I mean, but that's bingo that hit it.
Yeah, yeah.
So, and part of what I see a lot of people putting into place, um, and it used to just be larger institutions, is that they're hedging um, positions in like the spiders, the longer side.
Hmm.
And because we're supposed to, everybody's been calling for this little drop that we're getting, and
Right.
they've been hedging it with volatility, with the VIX.
Yeah.
And so they're
That
long
real
calls.
estate thing they're talking about in the fall, they've already started in Las Vegas. They released, I think it was 500 acres of BLM land to build homes out there. And so that concept of giving governmental land away to build more homes has already started.
Right.
Um, and then, of course, there's that $25,000 down for new guys that Kamala Harris was talking about, and they may put their own little twist on that. So, they could try to do something with real estate, but when it's 10 times income in California to buy a house and 5 times income, normal, these prices may have to come down before
Right.
anything gets
Well,
settled
and
up.
what's interesting, as we've just been talking, Apple's gone up another, well, now it's up $4 over what we were just talking. It's trading 237 now.
Mm. Yeah, well,
In
like I
fact,
say,
no,
the
excuse me,
63.75
238. I
was
don't know
certainly,
why.
like I say, yeah, 63.75 was certainly support, and 19 to 20 on the VIX is definitely an accelerated price. And
Right.
so basically, it's caught everybody going a little short, and and in this kind of deal, when they catch you going a little short, they can sometimes go the other way pretty good.
Well, it could also have something to do with the fact that news just came out on Google, on Alphabet, that the judge issued sealed ruling in Google online search monopoly. So that case is over. Well, they will not have to sell off Chrome, and Google just rallied about five and
Had
a half
rallied, yeah.
You're
percent.
right.
Yeah,
Yeah.
Google rallied $14.
And then
right.
Google and Apple are supposed to do something with regards to Siri or something. So I don't know. It seems
And
like
there could
those
be,
two
but I,
stocks.
I, I thank you, Michelle, for letting me know on the Google because I was only my eyes were focused on Apple, but I see it now as
It's, yep,
well.
it's
And
definitely
there's
reacting.
going to be fallout just across the board, I think. So anything that's kind of tied into all that stuff will start to come through.
Yeah, I
So
don't think you can get too bearish in the billionaire club. I mean, I
Yeah.
don't say that to be controversial, but
Yeah.
let's face it, these guys have a lot of control
Yeah.
and a lot of influence, and that's why their stocks have done so
well,
well and will continue to do well.
Well,
Yep.
and the one thing that I've added, because there's a lot of people that, I'm talking about having a cycle degree, which is a pretty large degree, top being put in here when we're done, which means we're going to go through a cycle degree fourth wave down. And it should be pretty heavy duty. And so everybody's going, well, how that's going to happen if AI is going to keep up? How's it going to happen if NVIDIA doesn't start to go down? It's like, trust me, when the market decides to give it up, all the stocks are going to go down, but it doesn't mean that the company is doing poorly.
Exactly. And by the way, I
Yeah.
think the Black Swan event, if we were going to have something like that, has to do with the debt, the
Oh,
increasing debt and
absolutely.
deficit, and the bonds. What the bonds were doing today, not just here, but
Everywhere.
globally, in the
Globally.
right, in the right. It's showing fear of inflation. It's showing fear of
Right.
nobody buying our treasuries.
Right.
I mean, all that's your potential black swan. We've had that though. It's like that radio's been on. That's why
Right.
I've
Yeah.
always
Yeah.
been long gold and silver, because that radio's been
Right.
on
Gee,
for a
Michelle,
long
you and
time.
I should talk more often because I am the original gold bug here. But I agree with you that and Jim and I have been talking about this for quite some time. Then I still believe that the canary in the coal mine, and you're saying, you're using your phrase, I'm using canary in the coal mine, is you say black swan, I say canary. They're both going to die. So
They're
is
birds.
that it's in the treasury market. And I do believe it's because of our debt. I do believe because it's the three major credit agencies have downgraded the United States, not our bonds. They've downgraded the United States. And
Yeah, and
because we have the inability to deal with our debt. And what we've just passed is going to be adding how many trillion?
six, I think it was. But
Mm.
also you have the fear of the loss of the autonomousness, if that's a word, of the Federal Reserve. That came out too last week. So,
Right. I mean,
you put all of this together
it could be
and
very dangerous. You're
it
right.
could be
It could
dangerous,
be
but
very, very dangerous.
but
I
we
think if she, well, I think today were they not starting uh, uh, a hearing or just the vetting or whatever they call it to approve of this Fed governor or this person that's being lifted up to be a Fed governor. And that's before we even hear what anything of this judge has got to say about from Fed Governor Cook going and saying, I'm suing, you can't fire me. So we got just so much going on that could unwind all of this.
Yeah.
absolutely. And
So,
that's the point. And since we're all technical traders, though, what we do know is I mean, you can talk to somebody like Ray Dalio, who's been talking about this big debacle in Black
the end of
Swan
the
for about
world.
4 years now. I mean,
Yeah,
it's
well,
right. So you have to watch the price. That's what we know.
yeah, I agree with you on
And
that.
have gold and silver in your portfolio. Let's add that.
And just,
If
by
I
the way,
may, when you say
should
gold
we,
and silver in the portfolio,
Yeah.
gold is
Well, I
breaking
wonder.
out.
Yeah. What's your feeling on the gold and silver? Well,
I mean, it's breaking out. I didn't
yeah.
even pay attention to it until Michelle just mentioned it. So again, good looking out, Michelle, on that. So after just looking at this now, I'm like, wow, okay, gold and silver, well, especially gold. Gold has been basing for quite some time now. Yeah, you can go on that weekly time frame and you'll see how it's just been basing and basing. So I'm not sure what the news is that caused it to break out. That was one of the things we were waiting for to see which direction is going to break out into the upside or the downside. I guess my
oh,
Yeah. They
question
gave
would
you a
be,
couple of false signals both ways, right?
That's true. It did. It
Kind of,
did.
but it was a triangle pattern, guys.
A
Exactly. But
big,
now it's
huge consolidation is what it
huge,
was.
huge. And it was for a
Huge,
while,
right?
almost like
Oh,
months. Like what?
Months since March,
Yeah.
I think it was
Yeah, since March.
between 3,300 and 3,500. And then the other interesting thing, since we're talking gold and silver, is the US last week announced that silver was a strategic mineral. And we know that it's used in EVs and solar. And even though the current administration talks down that, we also know that we need every single form of energy right now on deck because of
hmm
the demands of AI and data centers. But what to me, I've been watching with gold and silver is that ratio, and it popped back up in favor of gold again today. But I'm watching so carefully because this inflation talk, I think, is out there, but I'm not ready to like jump on the hyperinflation bandwagon until I see that ratio between the two metals drop below 80. Silver is still relatively cheap compared to gold on the ratio level. So love them both. But that would
Sure.
be like an old sort of formula to watch. And that would also mean like we could get like a parabolic move in silver, but also in
Yeah.
gold. And of course, that wouldn't be so great for the market
Now, if
either.
that happens, though, do you think that that's going to cause the whole overall market to kind of like turn bearish?
I
Well,
mean,
yeah,
Is that like a
possibly.
foretelling of what's going on in the market and what we should be expecting?
Well, we know that equities and commodities can go up together for a while, but we also know at some point that split. So if you just go back in history, and I imagine some of you might remember besides me, 1979, 1980, this is exactly what happened until we started to raise the interest rates to preposterous
to
proportions.
stop it, yeah.
And we don't have that kind of Fed now, and we don't have that kind of administration now. So, it does leave the imagination wide open in terms of what could actually happen, not only with inflation, but obviously with precious metals. And even Bitcoin today, I think that might have bottomed. Everybody was sort of was giving up on that, but it's another viable alternative asset to fiat currency and to the market. And that started out the day at around 109, got up to
Right.
112 at one point, and it's rallying a little bit as we're talking. So
yeah. 3,000
interesting.
in a day is not bad, huh?
Not
Well,
bad.
there also there's a little correlation between them because there's a lot of traders in gold that they've been waiting for Bitcoin to make its turn and to start to feed up or move up, and that would be the trigger to kind of jump it back into gold. And now we're seeing that, and now we're seeing it happen to both. I don't know how long that one's going to last, but I will say that I've got a big cluster of resistance here. And just on an Elliott wave basis, I'm looking for this small fifth wave to complete, although we're just probably finishing a third, come down a little bit in a four, go back in a five. That's going to finish this interior five, this five, and put a three. So, and if you go from there just on an Elliott basis, I'm going to look for a fourth wave. Now, whether it gets up to here or whether it gets up to here, it still should be large enough. Now, technically, Elliott tells us that when a fourth wave is in motion, that it's most common that it's going to find its terminus or its endpoint within the fourth wave of one lesser degree, and that happens to be right here. So the grace is that while the fibs might show that we've got potential to come down from 29 to 2,800, which would be a much larger pullback, but with the grace of what's happened with this fourth wave, my first line of defense is 3,300. So
Yeah, I would agree with that.
I think
3,300
I
is
think that's going to
definitely.
be, yeah, but it's going to be an opportunity where a lot of people are going to bail out because gold's going to fall $300 or $400. So it's like, okay, I'm out, and then it's just an opportunity for uh, the market makers in gold and others just to kind of load up and get back on
That's
because
why I'm watching silver so carefully.
So you're talking about silver as opposed to gold? Because I mean, when I look at this chart that Michael is showing right now, that's a clear breakout. Like that's a classic breakout pattern. And
oh
usually
yeah,
any pullback is usually just more profit taken. And we talking about like, I mean, gold is looking like Michelle said earlier, it's looking very, very interesting. I mean, people have been waiting since March to see what's going to happen. And
right.
whatever is taking place now, it's like almost like the footprints that,
Well,
we are
yeah,
ready to
yeah.
take this even higher.
Well,
And
this could be related to waves. You guys would know better. I'm not a waver, but what I have noticed about all commodities in general, but particularly gold and silver, since it's the most publicized, is that has been a history of selling strength and buying weakness. And so whenever it starts to look great, that's when the sellers show up. When it starts to look really bad, that's when the buyers show up. But when that formula switches, when we start to see buyers into strength, like we saw Friday, like we're seeing today, that's when the parabolic move can come. And I
Right.
was actually on the commodities floor. Yes, I'm that old in 1979, 1980, when that happened. And right, any dip was just immediately bought into. There was an appetite that was uncontrollable until, of
sure.
course, the fact we peaked out. With
Right.
silver, it was the Hunt brothers that kind of put the kibosh on it, but it really was the interest rates. That's why I'm saying. I mean, right now, this thing could go. Gold could easily go 4,000 or higher. Silver,
Absolutely. I mean,
fifty
from what I'm
dollars or
seeing, yeah,
higher.
yeah,
And,
yeah.
and again, everything we talked about earlier in terms of the fundamental cracks in the foundation is one reason.
Right.
Or it's still
Yeah.
in very undervalued assets. I go on mainstream media all the time and they never talk about gold or silver. When I bring it up, they just sort of nod their head like, oh, okay. You know.
Well,
Yeah, I mean it's something that's
they will
really
not only be nodding their head but crying very soon.
yeah,
It's like
exactly
coulda,
right.
shoulda, woulda is what you're
Right.
going to be
Good
hearing soon.
point. This is my maximum monthly, and I just want to show because again, if you have an understanding of Elliott, this is a larger cycle third wave up. It's going to consist of 5 waves of primary degree if only the first and second are done. So we're in that third wave of a larger third wave of and then we can just count it all the way up. It's subdivided once, twice, 3 times, 4 times, 5 times. That's the subdivisions all the way up. And so we're just finishing this one. We'll get it when we get up to close to 4,000 or whatever the line's going to be up here. That's just going to be finishing this one, the minute. Then we're going to come down into 4, go back up into 5, and that's just going to, these are third waves they're finishing. It's just going to finish the minor. So yes, can we get up there? Yes, 4,000 plus. For easily, I think 4,000 plus before all is said and done. Now, a lot of people want to say, was that going to happen by the end of the year? It's like, gee, you know, that's like trying to predict when Christ is coming back. I mean, come on.
Can I ask a question? Because this is what's got my curiosity now. Do we know if it's what's moving gold as far as like the underlying, stocks but that is involved? Is it the miners? Is it
Well,
something else that's
I don't.
moving
I think the
this?
miners are going to be goaded on by the price acceleration in gold. But my thing about miners is like people say because it's always going to be cheaper than gold to go after the miners, and they should respond well. But I think it all
They
depends.
have responded well.
They have. You're right,
I
but
mean, I knew Newmont Mining's gone from $30 back to 80, and the GDX is going through the roof. So
right,
whatever was holding back the miners is not holding them back any
not
longer.
Well,
anymore.
here's
Right.
why. The central bank demand today, gold reserves surpass U.S. Treasury holdings for the first time in 30 years. So we're going back
Nice,
to
nice, nice.
1995. So that
Okay.
when that demand by central banks becomes relentless, then of course that's where miners come in
But you
because
do realize who started that?
China.
Yes. And it's just an interesting world events all happening and swirling around that people are not piecing together.
Oh yeah, well let's talk about oil and gas for a second if we may. I'd love to know what you all say about that from a technical standpoint because
Yeah, put up the
crude,
crude. Let's
yeah,
take a
let's
look.
put up some crude oil
Mhm.
because this I call this the X factor in the whole inflation narrative. And crude oil, we're looking at WTI or you're looking at Brent, which one?
This is
WTI.
crude.
WTI. Okay. So everybody thought this is going to $50 a barrel, right? And yet here we are, not over only 64, but we're tackling 66. And I think we get over 68. I don't see any reason why we can't get to 80, 85, 90, 100. Everybody talking about the glut and the overproduction
Right.
of OPEC plus and drill baby drill. But I live in New Mexico. So it's not the main Permian Basin, but it's part of it. Texas would be the other second largest producer of oil and gas state. And I've been talking to some of these oil producers here, and they're telling me we're just not going to drill. We're not going to frack. This is not good for us or cheap oil. So,
Right.
if we get into any kind of higher demand for whatever reason, I mean, it's like another one of those ifs out there. But if we start to see these oil prices really clear over 75, 80, for whatever the reason is, that's another X factor, not just to the cost of everything in terms of inflation, but it also brings up the interesting dilemma from a geopolitical standpoint, because right now the EU is getting pressure to not buy oil from Russia rather than buy from us. We already charge a huge tax sort of on their oil that they get. Whatever we send to them, we charge like a lot more. So, then you're setting up like, oh, I'm going to go buy from Russia, not so much from the US. It costs too much money. There's so many quagmires out there. It's what makes life interesting every day, but oil is definitely one. And natural gas, since we're on the topic, is so ridiculously cheap. I mean, it's trading at between 2.90 and $3. And this is probably the number one fuel source for AI. I mean, everybody loves uranium, but we're not there yet. We're not at nuclear plant level yet. So I just find the whole energy space also super interesting as well. And XLE, which really is the big oil companies, has had a major breakout last week.
Right.
Yeah, throw up a Chevron because I got long that thing at 130, 140, and this thing is now filling that gap up at 160, 165. So it's been a
What is it?
darn good ride.
CH? What's
CVX, Charlie
C?
Victor X-ray,
I knew there was an X
the
for
head
that.
honcho in energy.
Wow.
You
This is
can't
the
really see
weekly.
too many gaps on that one. This was on, I guess it was on the weekly that you could see the gap
I'll
a little
give you
bit better.
the 3-year weekly. Yeah.
That's amazing how different charts look differently. Anyway, it definitely looks like it has been trying to matriculate to the upside.
I agree. I mean, after that little plungette, it's now working on.
My only concern with that chart, as I'm looking at that, is this is what you call those channel in stocks.
Yes.
You can almost form a channel, whether it's sideways or diagonally downwards, where we are now hitting the top of that.
Right.
So
Oh yeah. Well, the gap was at 165, so 165 was the target. What's it trading 162? So you're
I
in the
gotcha.
neighborhood. You're in the
Okay,
neighborhood, yeah.
very
But
That'd
good.
be
look,
a reason for it to stop. And once you fill the gap, that would be a nice reason for it to stop. Yeah.
and look at
Nice.
it, look at XLE, because that's, if you want a more exposure to other companies outside of Chevron, like if you want a Buffett Occidental Petroleum exposure, XLE has some of that.
Okay.
So there
Yep,
you
that looks
go.
nice. That looks
Yeah.
nice.
Now you look at the close the last 2 days. It just really took out a lot of work over the last month or so.
Right.
So we'll see. Yeah.
Yeah. What about the servicers? Halliburton, Schlumberger, those kind of guys. HAL, SLB. Are they getting any action? Not
No,
really.
Not really. I
they're
mean,
stuck.
they're stuck, right? I mean, they're not in bad
No.
phases, but they're not like super bullish like that, or even like utilities are, given although utilities sold off a little bit lately, which is so interesting.
Yeah.
Yeah, no, look at this, so underperforming, but this is something to keep an eye on as well. If the energy and the oil prices keep going up, these things will react and give a
Yeah, they
great
will. They
opportunity.
should. They
On
Yeah.
should.
the utility front, what about VST and CEG? They seem to be, let's
Wow.
see, they look like they've had a nice little run. Huh?
Yeah, that might have just given you an opportunity to go pick some up if you really. That's not bad. Kind of like that's coming up in a nice little run. 3, 4, maybe come a little bit more, but as long this is a weekly chart.
Yeah, that weekly chart, I would be concerned a little bit about that. Just expect it to pull down a little bit more. What
Right.
is to that
Yeah.
What's that purple line you got over there? 200?
Yeah, that's a
Yeah,
daily
maybe
200.
down there on the daily. Yeah, even if you go to the weekly, which is what you had it on prior to this, yeah, you can see it's beginning to roll over, so to speak. And that rollover could easily go all the way down to the 50 simple moving average right there. What that's 50 EMA. It's
These are
probably,
EMAs. Yeah.
yeah. So that 50 EMA, I would probably expect it to come down there first before we start anticipating any reversal coming back up again.
if.
You know, what's interesting is, there's these data centers being built in the middle of nowhere, like Abilene, Texas. And, obviously it's a very, very big project they're trying to make and making stuff. And you just always, when you look at a project like that and, how much things have to stay the same for them to complete the project and have the project really work. You sometimes it's almost like in real estate, when they were building all those communities, then they just stopped building them, back in '08 and stuff. You wonder if the news were to change on this whole AI because of the fact that maybe people aren't making that much money on the AI investments and they stop making them. And then you're caught in the middle of Abilene, Texas with this huge data center you built. I mean, it wouldn't be ironic if things slowed down and they were stuck with the Abilene, Texas
Yeah.
thing that they can't finish or something like that. Because I was in Las Vegas when the real estate thing stopped, and golf communities started getting an awful lot of grass growing on them. You know what I mean? So when the wheels of these kind of things change, there are people left holding the bag, and the middle of nowhere in Abilene, Texas would be an interesting place.
Right.
Michelle, I would like to talk a little bit before we run out of time here. Just quickly, if you guys can give a couple of sectors that you kind of like. I know you said you had a few sectors, Michelle. Which ones do you think are most interesting right now? With it, I think you said healthcare, maybe, or
Well, I think what's happening with biotech is interesting. I'm a little scared of it because of the
Mhm.
political footballing.
Yeah.
But nonetheless, if we just look at IBB, which is the one I usually look at, but XBI as well.
Mhm.
They did very, very well today. They were up in a market that was down. It's cleared over a key range. We call it the July 6-month calendar range. I think I mentioned it earlier when we were talking about some of the others.
Mhm.
And it's been an underperforming sector for so long
Mhm.
that, looking at it from an opportunistic standpoint, probably should have been long already over 135. So you're paying up a little bit. But I think if you can control your risk and use that 135 level as your key area to hold, this thing could act really well. So that would be one. Individual stocks within that. I mean, we've been long Tempest
Yeah, yeah,
for. I love that stock,
What's the
yeah.
TEM,
symbol? What's the symbol?
TEM.
TEM.
Yeah, they're
And
also
TEM?
involved in the technology section of the,
right,
and of
AI.
course,
Yeah.
yeah,
Uh,
that's a good one.
TEM. Yeah, there
Yeah,
you go.
Tem.
Yeah. I mean, just look at this chart. This thing looks
Hmm.
explosive to me. And I mean, I actually, believe it or not, I learned about it from a guy who works with us who was a biotech professor at Purdue. And then I saw Nancy Pelosi, accumulated a lot of this. And so that's what got me interested. And it's a great trading stock because, you can see it goes up and down. But at some point, and it could be coming really soon, breaking out of all of this, this looks like it might have been what the highest close. What's your time frame there, daily?
This is a monthly. I'm
Monthly.
going to go back to see. This is
Well,
only,
yeah, it's a new company, so it's not going to have great data going
Yeah,
back
it's
a
only
long
yeah.
been in
time.
existence since June of 24.
That's
Right.
right.
And
No,
yeah,
it's got
and
to be a
what they
1 year deal.
do is they AI database, diagnoses, doctor
Hmm.
records, it makes it really literally seconds that a doctor can look up a person's chart, get it all together, and then come up with a diagnosis based on all this AI of that too. I mean, they're really at the I'm sure there are other companies doing it, but this one is the premier company, and it's also kind of a Twitter, now X, darling. People love to talk about it. So
Hmm.
that's probably helping the biotech space. I was long Tiva forever, and then I got out of that, and now all of a sudden I see that's starting to look a little bit interesting again. TEVA. I guess I like stocks that start with T. But you can see that that too had an inside day on Friday, didn't quite get over the outside day. But we have cleared some of the former resistance if you go to the left, and we obviously have resistance up higher. But the biotech space and the energy space and the other space, if we're talking about in terms of what I'm like totally obsessed with, I, and AbbVie, by the way, also looks like it's ready to explode. That was one of my
Hmm.
top picks of the year. with the money show, and it kind of made me look foolish for a while. Now it's starting to make me look smart again. Rivian was my second. That made me look foolish. Now that may be starting to make me look smart again. But if you just look at the vanity trade, what I call, which is all of the impact that's happening, and it's amazing, it's explosive of people taking diet drugs and how their spending habits are changing. So not just the
Yeah.
companies themselves that look so undervalued right now, Novo Nordisk, Eli Lilly in particular, Viking Therapeutics had terrible earnings because of the pill, but you can't lose track of these things. Hims, which also had a down day, but is like right there in the hub of delivering this stuff. Watch like commercials on Hulu, and I swear to God, every other commercial is a commercial about losing weight. And and then you have to think, what are they spending money on? Diet supplements, beauty. Ulta had a huge turnaround today. Elf Beauty. So makeup, hair, supplements,
Yep.
going to the gym, exercise clothes, just I like to say, find somebody because it's not hard to find somebody now who clearly is taking the diet drugs and say, what are you buying? Has your spending habits changed? And alcohol, by the way, has gone way
Yeah.
down,
Yeah. It's tanked.
tanked, right? I mean,
Yeah.
part of it I think is generational, but still, it's
Hmm.
also I think part of this whole I call it a megatrend as more and more people start to believe in this and the price comes down. I mean, certainly we have an overweight problem, an obesity problem in this country, and a lot of people are turning to it.
Yeah. That's
Right.
interesting. Wally, did you have anything on your mind as far as sector two?
Yeah, yeah. So I don't know if it's necessarily a sector, but like these, and I know some people might disagree with me on this one. Some of these Chinese stocks that I've been hearing about lately, like Alibaba
Yeah.
and Baidu. Not sure what's going on over there,
They're on the move. They're on the
but
move.
they are definitely moving.
They had great
And
earnings. Alibaba had great
is
earnings, by
okay, is
the
that what it
way.
was? Okay,
Yeah,
all
yeah,
right.
yeah.
But yeah,
I
to
mean,
see them, I mean, they were beating up, and it seems like they are beginning to rise from the ashes. So BABA, Alibaba, BABA is coming out
Yeah.
looking really good.
Once it got above 125, 122, it was breaking out. Yeah.
Yeah, yeah. So I don't, again, because I'm not a news follower at all, I'm strictly 100% technical analysis. I don't know the news behind it, but when I started seeing these pop up on my scans, I was like, wow. Now I'm not a big Chinese company type of, investor and trader, so I don't really hold it, but I was like, wow, something is happening here. I don't know what the story is, but it will be interesting to see what's going on over there. So, if you tell
You put a
me, I'll say,
weekly up. If you put a weekly up, Michael, you get a perspective on how far the thing could go if it got cooking on the weekly.
This
yeah,
is a
this
week.
is.
This
Yeah,
is the
Yeah.
put the
5 year
monthly.
weekly.
Yeah,
There you
okay.
go.
So yeah,
Yeah, you
there you
see.
go.
Yeah.
There you go. See that right there? I
So
mean, and
there's nothing but huge upside if
depending
it
on how
gets
you want
through
to
this
look at
area.
this, you might look at this as, oh, this is the beginning of a cup and handle kind of like pattern and all that kind of stuff. But regardless, it's just one of those things where it's like something is happening. They were in the trenches, at 70, 65, 6, $70, and then now they are almost double
Yeah.
where they were. And
Yeah.
so and then like Michelle just mentioned with the earnings coming, I didn't know it was earnings, but just to see when it came up on my radar, and I said, wait a second, why are these stocks moving? I thought there were some issues with China and United States and how all these Chinese stocks were not doing so well, but to see them coming back now, I'm not sure what the storyline is, but it'll be something to keep an eye on if
well,
anybody's
yeah. And
interested in
by
that.
the way, Alibaba right now is hitting. I'm sorry for the background noise. Alibaba right now is hitting just about an 80 monthly moving average, which I love to use because it's a 6 to 8 year business
You
cycle.
said a 80 monthly?
80
Okay,
monthly, yeah.
okay.
I learned this from the oh God, these sisters. Of course, right now I'm not going to think of
The
their name.
Aiden sisters.
Aiden sisters, thank you.
Come
Yeah,
on, you can't forget
yeah,
them or the Andrews
yeah.
sisters.
I know those
They were in the
girls,
same band, I think.
Never heard
right?
of that one before. 80 monthly moving average, right?
That I got that from the Aiden sisters. We used to subscribe to their stuff. And basically it measures like a 5 to 6 year business cycle. But anyway, if you look at Alibaba, it broke down in 2021, which means it was going into a major contraction from a business cycle. And right now it's touched it a couple of times, but it's 142. If we get a monthly close over 142, we went from a major 6 to 8 year business contraction to what we're already seeing seeing is a 2-year business expansion cycle once it got over 80, but now it would go into something much more major, which means if you also, same thing, by the way, if you look at KWEB, which is like the ETF for all the
Yeah,
technology,
all the tech
Chinese
stuff. Yeah.
technology, that too is right below that. So we could have a major move in the Chinese stock. So I'm glad you brought that up because I've been looking at that for a long time too.
Yeah, it's definitely a sector you'd want to have some exposure. And that David Tepper is loaded to the gills, the guy who owns the Carolina Panthers, in his 13D filing, and he doesn't seem like he bounces around like a bunny hopper, so he's probably still in there. So yeah, I look at those 13Ds sometimes because those people are pretty wealthy for a reason.
Yeah.
I
Let's go
agree.
around the horn. Michael, explain how people can get a hold of you and if there's any special offers, and then go from there.
Sure. You can get a hold of me. My email address is michael@mjf1partners.com. Um, I have reinstituted and restarted and rebranded the Logical Signals Trade Room, which is really set up because it's for day trading and some, um, oh God, the word just got day trading and some swing trading, but it's all intraday. And so my focus really has turned to gamma positions, to call walls, put walls, different things like that, which affect our intraday markets pretty strongly. So, but I'll be sending out on my lists invitations to join the new trade room. And so those will be coming out. So if you want to get on my email list, you may already be, if you're a regular here, I'd likely already have you on my list, but I'll be sending that out. And as soon as we get people in, then it opens
Okay,
again.
sounds great. Absolutely. And Wally, would you like to share how to get a hold of you? And of course, special offer if you had one.
Yeah, absolutely. So my website is rightsidetrading.com, right side trading. So just think about the right side of the chart, trying to anticipate what's going to happen on the right side of the chart. There you go. Thank you very much. We have a weekly um, webinar to kind of like see what's going on in the market every week. And so since yesterday was the Labor Day weekend, we did not do it yesterday. We'll be doing that today. So anybody who emails me at info@rightsidetrading.com, I'll let you come in at no cost. Also, I put a link up here, which is our Labor Day sale that we had yesterday. We'll keep it up for today for anybody who wants to take advantage of that too. You'll see it in the chat box as well. But yeah, rightsidetrading.com, that's who we are. Thank you, guys.
Okay, perfect. Perfect. And Michele, again, how do people get a hold of you? And I know you have a lot of things that you offer, so let's go through some of them.
Well, our website, which you're showing, is marketgauge.com, and we have a great amount of content on there. One would be my daily blog, which I call it a daily blog. I'm actually now writing it 3 times a week, but you can get it there. But also, there's a media tab up there. So if you ever want to see any of the clips from any of my media appearances, there you go. And then on Sundays, there's a market outlook that comes out with a video that's done by Jeff Bish and Keith Schneider. So great place to go find some free content. I'm very active on X, and that's at Market Minute. You can ask me any question. I talk to everybody, and I try to answer every question. And I do some spaces on there. And the other thing I want to mention is I kind of started this about a month ago, the beginning of August, really. This company called Slice got in touch with me. They invite mentors and then have you can trade with mentors for very little money. So that's slice-app.io. And I think they're about to do like a free, not a free, but $1 for the month with me for the month of September or October. Otherwise, it's like $69 a month. But I put trades up there and we're already up pretty good. I took a break, but for a holiday, but now I'm back. And that's kind of a really cheap way to see what I'm trading.
Yeah, that's a good entree for sure. Well, you guys, I do appreciate you being here, Michele, Wally, and Michael, and everyone who's here. I do thank you for attending. Hang in there right now because I'm going to be doing a 30-minute seminar on options and markets that I like right now. So stay with us, and I'm going to turn it back to David. And David, we'll set up the next 30 minutes of the option professor.
Thank
All
you so
right.
much, Fred, guys. Very
Oh
much.
yeah,
It's great.
thanks, Michele, and thanks,
Thank
Wally
you,
and Michael.
guys. Yeah, you're
Yep.
welcome. Thank you.
Thank you.
Yeah, thanks everyone. Great discussion. So just a reminder for everyone, be sure to subscribe to Timing Research on YouTube, Substack, or your favorite podcast app. Or you can just come to TimingResearch.com, and this post will become the archive as soon as I can get the recording from today processed. And and yeah, I've been doing the show for over 11 years now, and the full archive of shows and events are permanently available on the site and the YouTube channel. So I just want to thank my panel again for today. Michael Filighera of LogicalSignals.com, Michele Schneider of MarketGauge.com, Wally Olopade of RightSideTrading.com, and Jim, the option professor of OptionProfessor.com. Thanks, everyone.